The unification of Nigeria's foreign exchange rate is expected to bring many positive results, including lowering the pressure on foreign reserves. Following the harmonization of the exchange rates in the country by the Central Bank of Nigeria, the total inflows into the importers and exporters window increased by about $270 million to close the month of June 2023 at $1.41 billion. This made it the second consecutive month of growth, rising by 23.8% month-on-month to $1.41 billion in June, as against $1.14 billion recorded in May. President Bola Ahmed Tinubu had earlier in June 2023 announced the intention of his administration to harmonize the exchange rates in the country, leading to the collapse of the forex market by CBN. Although foreign investors are yet to come trooping into Nigeria following the floating of the naira, a move that is targeted at attracting foreign exchange inflows into the country. The latest data by the FMGQ shows an improvement in dollar inflow into the country. Joining us on the show this morning to discuss levers for attracting FX flows into Nigeria is Bunmi Bajomo, Head, Group Corporate Banking and CEO, EcoBank Transnational Incorporated, Lomé. She's an experienced economist and financial expert. Bienvenue, Madame du Lomé.
Merci beaucoup. Good morning, Ms. Bunmi. How are you?
Good to have you in the studio.
Very well, thank you. Thanks for having me.
All right.
You're welcome.
Okay, let's talk FX, particularly the policy of the new government, the government of Asiwaju Bola Ahmed Tinubu, and the fact that the naira, has been floated. Is this good? Is this what the economy needs now? And how will you assess the first about 6 weeks, into this new policy?
Thank you very much, and thanks again for having me. Yeah, I will tell you that in principle, the policy is in the right direction. I join all others to say this is long overdue, and it's not strange, and it wasn't like we haven't ever been here. Prior to 2016 crisis, the market was largely a managed float system, and it was working seamlessly. Nobody really cared about FX movement or whether foreign investors were coming in or not. Things were working. The disruption came from the attempt to respond to the crisis of 2015-16, and then the policy action that emanated from there. But if you remember what happened in 2016, we went around this course of managing, and then ultimately in April 2017, the government realized that, you needed to allow the market to free float somewhat and allow market participants to determine the level of where the exchange rate would settle. And that led to the advent of the importer and exporters window in April 2017. And if you see that from when that policy was conceived and when it became operational in April, over a course of 3 months, you actually witnessed dramatic changes. And, all of the things that had hitherto been sort of disruption to that market actually normalized in no more than 4 months. By December of 2017, all of the issue around disruption of the market had become a thing of the past. So coming forward now, we're back to that same threshold and we're back to that same situation. But what is different this time? If you remember what happened in 2017, as the investors window was being opened, the government also now took a decisive action in terms of policy aimed at attracting foreign direct investment, foreign portfolio investors to return. What did they do? The government actually, in addition to liberalizing the market somewhat and allowing market participants, they then also created a special central bank policy instrument in terms of interest rate targeting. So we move at that point from exchange rate targeting, where we were visited on what level naira will trade at, to now moving to let the market participant determine but what will be the effective interest rate that allows foreign investors to find this market attractive as against going to the US, which is a developed market, but our market is not developed. It's filled with imperfection, information asymmetry. But investors look at different yardsticks. What would then make somebody to come to Nigeria as against to the United States and going to earn 5.25% right now? What will make it attractive is if with all of your market imperfection, you can create instrument that allows people to overlook all of your weaknesses. And I think that is what is not there right now. So if you look at what has happened in our West African region, we're not the only one going through this. I think all of this balance of payment crisis is actually an African thing right now because of the flight of capital to established markets, given the high level of interest rate. What is different right now is that with this policy, this policy has been on since end of May. June is past, July is almost over. I think by now, given what we have experienced in 2017, we have been through this road before. We should have started seeing significant flow and significant interest in this market. What is different now? In 2016, 2017, our policy rate was actually the anchor of where interest rate will be in the economy. And the risk-free rate moved in tandem with that anchor. But what we see right now is that the policy rate, we moved it from 18 to 18.5. But the TB rate over the past 2-3 years were kept at extremely low level. At some point, this special TB was trading at 2%. And it was moved to 5%. So if right now the TB rate, irrespective of which one you look at, whether it's the 90 days, 180 days, or the over 270 days, is still at single digits. But your inflation level, based on the June number, is 22.79. So why would I leave other markets and come and earn negative return in Nigeria? So I think that is where we are right now. That's what needs to be addressed, in addition to what we are signaling to the market. I think if I would say, I say the right thing for us to do right now is what should we do? I think we need to address issue around what we signal to the investing community. I don't know whether they are domestic, because in 2017, investing community comprises of both you and I who wanted to invest in high yield instruments, as well as the foreign direct investment and FPI community. So it depends on what we want to signal. So I think number one, we need to signal a sincerity of purpose, a commitment to the policy that have been formulated by the government. My fear, and maybe the fear of others, I mean, I'm speaking as Bunmi now, is that most people will want to see, the heat is on right now. The policy is overheated. Would the government be able to stay the course? Or at some point, they might equivocate or prevaricate.
All right, let's just get into there. Yeah, because we wanted to just break it up a little bit, because you made a very valid point, which is for us to create an instrument to, overlook our challenges. And this is a good way to, attract foreign investment. I just wanted you to highlight that particular aspect. What are these instruments that we can create to attract more investors in our economy?
Okay, so thank you very much. So, like I said, if you look at the dichotomy between the inflation rate as well as the policy rate and the treasury rate. If the treasury rate is at 10% on average, and the inflation is at 22.5, 22.79, there is already a massive negative yield. That negative yield, as an investor, if I look at it, there's no way I would come into market. So what does the government need to do? And I will refer you to a publication by Bank for International Settlement. So this is not a Nigerian thing alone. It's an acceptable norm in a period of uncertainty, or when government is pursuing policy aimed at stimulating investment, or a policy aimed at interest rate targeting. You can create specialized instruments, even at a loss to the central bank, provided the objective and the intent around those creation of those instruments. So what did we do in 2017? There was the treasury rate, but the rate on those special investment for the investing community, for the FPI investment, if you remember, was set so high that it was very difficult to resist. What BIS is saying is that central bank can actually create such instrument. It can be TB rate, it's not any fancy name, whatever you want to call it, investors instrument, But the rate must be commensurate with the risk they are taking. So there is no point creating an instrument and you say, come and invest in my economy at 10%, my currency is now free floating. Because the people that you want to come and invest in this economy would have to sell those effects into this market, and then they want to find investment outlet, whether in money market, in capital market. What will make it attractive is okay, this is an imperfect market. I don't get sufficient information. The information I get is I don't know what the government will do. But if I look at the rate, it's still attractive. I can't find it anywhere else. I think that's what the government needs to do. And then, the believability index is what we need to work on, like I said. Because if you create an instrument, if people don't believe that 2 months down the line, you will change that policy, they still won't come, irrespective of where you take the rate to. So you need to work on that credibility, believability that, we're sticking with this. This is the new policy direction, and come what may. Even though it is very difficult, people are shouting, you and I, we feel the heat. But as long as you will stay that course and then do other things that allow the situation to normalize, say citizens agitation or investor committee agitation will be reinforced if it's long drawn. Over a 1 month, 2 month period, there should have been clarity of this is where we are going.
Yeah.
And then
so two
we move
things
on.
now.
Yes.
We're looking at the NXP registration, of course, being a critical part of the foreign exchange transactions, considering the CBN's decision to no longer, of course, supply FX directly. Now, do you think that the current NXP procedure is still necessary? And how do you think the potential changes in this regulation will impact foreign exchange flows? And more importantly, I wanted to talk about the impact of the small levies, on levies on small businesses, because that's very significant now that business owners need that money in hand to be able to pay for cost of operation. From your analysis, do these levies affect their growth? And do you believe that there's room for, let's say, the reorganization or the repurposing of levies across markets to make, give small businesses, to reduce the burden on small businesses?
Okay, I think that's a very important ask that you've asked me, but let me quickly touch on the NSP. For you as an exporter, for you to export anything out of Nigeria, because it's expected that whatever you are selling, the inflows will come in. So you are supposed to register it through the central bank NSP window. There is a form where you fill, you disclose what you are selling out, and then because before now, the CBN used to be the sole supplier of FX, largely in the formal market. You needed to export things that are eligible, and then you need to register. And then after a certain period, 90 days, you are expected to repatriate those export proceeds and sell to your bank. So the thing right now is that if the CBN is no longer selling FX, so CBN does not need to facilitate my trade, then strictly, I don't need to give account of how I have sold my produce, because I have then sourced my FX from anywhere and everywhere I could find. So the only thing is that as long as the expectation is not still that, you must sell to a certain segment, if it's just for documentation purpose, I reckon the Bureau of Statistics, the central bank as the regulator, and all of the other government parastatals, they might need to monitor how much trade. It was reeling out numbers. You need to document those trade for you to know what is going on. But it cannot be like a compulsion, or it's like, this is it. So I think there needs to be a policy around that. A policy pronouncement around that. You know what? It's for documentation. You really can sell it anywhere. And across West African market, if I take the Liberian economy as an example, because we have similar characteristics, it's a smaller market, but they are highly import dependent as well. Exporters, and exporters can sell their FX anywhere and anyhow. The government is not involved in the business of selling FX, but the FX flow, despite all of what is happening now, they are importing almost everything, including food item, but the inflation rate is still single digit. It's at 8.6.
In Liberia.
And yes, and FX flow has not dried out. FX flow has not dried out because there are other sectors and segments that people can trade in. But for us, we are largely we focus on petroleum. But in Liberia, if I use that, they focus on the mining sector, the mineral sector, iron ore, mineral gold, diamonds, and then you have the rubber, which is a major. So in between those four commodities, it accounts for over 93.7% of their export receipt. But we are largely focused on us. So that is what I mean. We can go on and on about that. But to your question around SMEs, it's so important because we keep saying, people are not paying taxes or so. I think we focus on the upper segment of the market. You know, in the small, at the base of the pyramid, in the small micro space, I think there is need to revisit the administration of levies. I don't want to call it taxes because they don't file tax return. You assume they don't pay. So about 2 months ago, I was in the market on the mainland and I went to buy something. I was buying fruit from this lady, and then I noticed some people, like women, like 4, like housewives. They just came in and then she brought out 500 naira and they gave it to them. So I was looking at them and they went to the next person. These are not documented traders. They weren't in shops. They're the people by the roadside. You know, they went to the next person. She gave them something. So I was forced to ask the lady, what is that? Of course, she was very sad and everything, but what can she do? And she said, you know what, they come in the morning, they collect 500.
Wow.
In the evening, they collect 500. I looked at that lady's total sale, maybe maximum 15,000 a day. So 1,000 or 15,000 on a daily basis, multiply that by 30. That is just
Who was collecting, touts or local government?
I don't know, housewife, I don't know whose interest they represent, but they are, from what I can see, maybe they are the community owners or something, you know. That's how I can conjure, I mean, I could conjure it. So they collect 1,000, then the local government will come. Of course, they don't have store. They ticket things for them. They pay that one. Then the Kai people that, you know, chase them in the market, I'm sure you see them on Lagos Island. They pack somebody's clothes. She has to go and settle. By the time you bring all of those, what is actually the disposable income of those people? I think, so, you know, I understand that, okay, we're commoner, they are landowners and everything, but I think the government, you know, maybe the new committee that is set up, they need to really look at those kind of people who can't really speak for themselves, who are defenseless, and see whether they are actually paying. Maybe they are actually paying more than you and I,
but I
relatively.
That they are not even supposed to pay that, because I understand that about 90% of them make less than 25 million naira, and there's some sort of law against
they're
that.
expected to be exempted.
Exempted.
You know,
So, but it's not documented. This is not formal taxation.
Yeah. So
it's not formal. It's communal. So if I'm here, in at Family Junction,
yes,
and somebody says, "Oh, I'm Onile" or something like that, you must pay me. For me to continue to operate in that market, I cannot fight them, so I must pay.
But are you asking for that money to be looked at as well, or in terms of improving on the economy, or what are you looking at?
No, so you see, the thing is that those are even leakages, because it's not even in informal sector.
Should not be, yes.
No, so it should not be, because
the informal sector is a very important aspect as well in the economy, correct?
Yes, I agree.
Yes.
If it's so the formal economy, if you formalize it,
right,
probably they don't have to pay that much.
No,
but because it's informal, different people keep coming, and they are defenseless. They can't shout because, you know, how do they fight that battle?
Right.
Okay, but we're running out of time, but I want to quickly squeeze in, 2 questions here.
Okay.
Our Naira is not on the top 10 of the strongest in Africa. Tunisia, Botswana, all those things. Pounds is exchanging at more than 1,000 now. Dollars is more than 800 Naira. Who is it good for? And how bad, if it's bad at all, can it get to the generality of the people? Why I'm asking is because you touch on the aspect of exporting.
Yes.
So, federal government sells crude. Before it was at $400 and something. Today it's at $800 and something. Federal government makes more money. Will there be any incentive to the federal government to want the dollar to come down if they are making more money that they can share? Because that's what they are sharing. The money, bulk of the money that they are sharing, that everybody is applauding, is coming from the devaluation of the naira, or the floating of the naira, much more than the actual sales that we are getting, from crude and every other thing. So if there's no incentive for dollar to come down, do you think it will ever come down?
No, I think it would have to come down, right? Because government is in the service of providing welfare and amenities and everything to government. The thing is that we're not a producing economy. No, sorry. As in, we produce some things, but the bulk of what we need, and that's the cost push element of our inflation. So if they share in naira terms,
yes,
they want to build roads. Those equipment have to be imported. Now we're talking about providing amenities, buying buses, all of those components. Even if you buy from Innocent, They are coming from somewhere. So whatever you think you are gaining in naira terms, in dollar terms, you are actually poorer. Because you know what a dollar could buy last year was 358 naira what?
Yes.
Now a dollar can buy 850 or 700. It's not sustainable. So in naira time, you can say the government is rich. When they have to do our debt obligations, we have significant foreign currency debt obligation.
That's right.
We have to find those foreign currency
That's right.
to pay that. People that are producing, manufacturers have to buy their equipment. They have to do everything. Where would those come from? You have to then take this naira from, from wherever it is, right? And use it to buy those things. So you can't leave it to market forces. But I don't want to be all doom and gloom.
You can't leave it to market forces.
You can't. No, you will leave it to market forces. But like I said, if you do all of the things that you are supposed to do, the law of demand and supply would come into play. If your market is attractive, people would come into your market. At some point, we don't gulp dollar, we don't drink dollar. We use dollar to buy things that we need, and we use it to produce.
Because market forces have suddenly become the idon. You know that everybody is saying,
No,
it's market forces.
So if everybody wants the same thing and it's not available, the price of that commodity would go up. The day it becomes readily available, it stops being important. That was where we got to in 2017. And you remember at some point it went to 500 and something, but at the end of the day, he said the CBN rate settled as 306, and then for a long time we're at 360 until the 2019-2020 imbalance came in, and then here we are today. I'm very optimistic.
Seems as if when dollar goes up, it never comes down.
Yes.
I think that's a good thing.
Unfortunately, we have run out of time. Miss Bunmi Bajomo.
Yes.
Dr. Bunmi.
Oh, doctor. We cannot not call you doctor. Dr. Bunmi Bajomo. Thank you very much for enlightening us on the program today.
Thank you. Thank you.